Good morning, everyone. Today is Friday, March the 17th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and thank you for watching it. So today is options expiry, and it's probably going to be fairly volatile because our cumulative delta remains positive after the run-up yesterday. And so today's going to be a little bit messy. What do I suspect? Range-based trading. The wicks are very, very important. Notice as volatility continues to rise, the length of our candlesticks from high to low are also going to expand. And so that really is what we are seeing here. And the big thing is, in looking at the market today, my suspicion is that we are in a formation where bounces are going to be sell zones. We are still beneath the low of the prior month. We tried to close above it. We did, and then this morning we've started selling off really from the moment it came into the area. So far, there's no wick on the top of this candlestick. That's very bearish. So we'll see. Now, where are we headed to? Let's take the two candlesticks to the left. We can see 39.55 to 39.49 is an important level in the ES here, the E-minis. And from there, we can see, all right, what might be on the forefront of the minds of a lot of traders today? Well, they're going to want to unwind their trades. Whether they're long or short, wherever they're sitting, they want to unwind the trade. And unwinding on expiration is why we have month-end volatility. So, and you might say, month-end, it's only March 17th. The option expires for March on the 17th here. So, what am I looking for? Well, let's look at the weekly chart. In the weekly formation, you can see that we're desperately trying to recover. We really are. But we're barely up above the low of 2 weeks prior. And so my suspicion is this. As long as we hold 39.50, the fades into 39.50 are likely to hold. You go, isn't that obvious? Yes, it sure is. Here's the thing. If it bounces before it gets to 39.50, and it moves, but it cannot get up over 39.84.75, which is the low of last month, this chart is going to sell off into the close. I don't think people want to go into the weekend long, simply because we have no idea what other cockroaches are going to come out in the dark. Okay? Also, Jerome Powell's coming next week. The Fed has literally backstopped the banks by providing them this element of liquidity. I don't know that it's really liquidity. It really is a shoring up of capital by guaranteeing that their treasuries are going to be paid out at 100% in their books. And so, literally he could come out and say, well, yeah, we're still going to raise 25 basis points. And a lot of people are thinking he's going to stop or cut. So I think the bond market is very wrong. I think folks are going to be very confused. And I think today's going to be fairly sideways. So I do believe we leak down into 39.50 and then bounce. I have no idea whether we're going to get up over 39.84. We stopped at about 4,008, something like that, this morning. And, now we're just rolling on down. But you can see all the wicks here. If you don't have to trade today, don't, is really what I'm trying to say. It is not going to be very pretty. I really don't think it's going to be very pretty at all. Scalping is still going to work. Look at how beautifully tech is performing. Here we're looking at the NQ, the most recent NQ contract here. And we are seeing that we're above the high of last week, right? We're almost to the high of last month, which is vastly overperforming relative to the market. Here's the thing about indices. When they begin to move out of sync, they start moving back into sync. So the question is, will tech give up the ghost and pull in a little bit? Or Will the other indices, the ES, the YM, will they come up and join tech? I'm always the one to think the dirty laundry will dirty up the clean laundry. And so I suspect that the NQ pulls in, but really, as long as we stay above 12,623, this chart also is in good shape. We are beneath the close of the prior day. That means sellers are trying to find a floor. In the backdrop of that selling, however, we've got a lot of positive flow from the prior days in the undercurrent. And so that makes me think that shorting is going to be hard. And it also makes me think that going long is going to be hard. So we're just going to think about this very, very carefully. Now, here's the SPY. Last thing I'll talk about. I've talked way too long today. SPY needs to hold 390 or hit 390 and then bounce. Remember, as volatility increases, we're going to have opportunities that show big wicks. So if you decide to come in and you go, hey, I'm buying that 390, and it collapses, you better make your stop tight. Otherwise, it's going to run you down $3, $4, and you're going to be upside down and you're going to be having a stress event. Don't do that. If it can't hold that 390-50, $390.50, lighten up. Lighten up, let it stabilize, and when it gets up over 391, you can take it to the north again. My thought is we've got our sell. If it's a normal day, we should see a sell-off. But none of the days are normal anymore. So above 391, traders are trying to hold steady. Below 390, more sellers are going to come in down into 387 and 385. All right. So far, everything from the wide angle screen shows a lot of indecision and market instability, and that means sizes should be small. Take care, and I'll see you on the Benzinga Pro platform.